My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to help you save some money. My job is not just to entertain you, but to educate, teach, put in context. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. Remember when the market was fun and a whole new generation of young investors convinced themselves that stocks do nothing but go up? Yep, it's all fun and games until inflation pulls the rug out from underneath you. Now we have a nauseating new reality where every rally feels like a selling opportunity, like the one we had this morning. And even the best companies can find themselves crushed like bugs on a windshield, splat, just like that, gone in the blink of an eye. That's the new normal after yet another miserable session, even as it started again as a great one, where the Dow dropped 465 points, S&P tumbled 1.84%, and then get this, the NASDAQ plunged 2.57% to the point where it is now off nearly 20% from its highs. Wow. What's happening here? What made me walk off the set this morning in disgust in this market? Not rage, disgust. Simple, Ukraine, inflation. No matter what you say to put the Ukraine situation in context, I got to tell you, a Russian invasion, obviously a big deal. If our meager sanctions don't deter Putin, then we're going to come in here one day and be down a quick 2 to 3% on the horrendous film of that takeover alone. So why get in ahead of it, right? Isn't that what people are thinking? Of course, this potential war could be over practically before it begins, like Desert Storm, where the U.S. defeated Iraq in just a matter of days. The stock market, after being dragged down for months by that one, not unlike this now, right? Finally roared higher the moment we started shooting back. Everyone who stayed in through that long period of failed negotiations ended up making a fortune. I'd love to believe the same thing could happen with Ukraine, except this time the quick one would be done by the bad guys, and the consequences, therefore, could be horrific. Granted, there's still a strong possibility that a war between Russia and Ukraine would only be a regional conflict, but our government's doing everything to make sure it's a global one. There's great fear on Wall Street that Washington simply doesn't have the horses to pull it off, and the stock market isn't ready for a bloody guerrilla war because the cameras will be rolling. Naturally, none of this is conducive to higher stock prices, at least not until the negatives are baked in, whenever that is. And that's why so much of the red on your screen, that's what it's about. But while Russia grabs all the headlines, you know what? I think it's inflation. Inflation is a far more insidious foe, at least for your portfolio. Unlike the Russian army, inflation is actually here in the U.S., and it's rampaging all over the country. Most of you are too young to remember our battles against raging inflation. I'm not. When the oil shock hit in 1974, people walked around, including me, with whip inflation now buttons. No, I'm not kidding. We wore win buttons. It was our patriotic duty to save, not spend. We all had to fight against inflation. In the end, we didn't kill inflation, though, until Paul Volcker. Then until he took over as Fed chief and took interest rates to 20%, caused the entire economy to collapse. In the early 80s, he was the most hated man in America. Now he's beloved. Now, there are a lot of rate hikes here between 0.25% and 20%. But inflation seems almost out of control as it was back then, which is why I've changed my stance. I hope the Fed stops buying bonds and quickly raises its rates by a full percent by the summer. I don't want to wear a kill inflation now pin. I want the Fed to kill inflation now, which probably means taking some drastic action. But the Fed can't whip inflation without whipping the economy, which explains the hideous downturns we get every time the market tries to rally, which is why I keep telling you to be careful. How bad is it really? Okay, we're going to do something here. We're going to take a stock called Vertiv, all right? It's a terrific little company that came public via SPAC, a SPAC merger. It was actually on my birthday in 2020, yep, 2 years ago. Unlike the vast majority of SPACs, this one's profitable with a stock that made you a tremendous amount of money, at least until today, when Vertiv reported an extremely disappointing set of numbers and forecasts, and its stock fell 37%, now down 50% for the year. Total annihilation. Was it execution? Nope. Was it a lack of demand? Was it a bad end market? No. They sold to the data center business, the best in the world. No, Vertiv's problem was far more insidious. Their raw costs went out of control because of supply chain inflation issues. They failed to sell enough product, not because they had bad salespeople or not enough demand. They had a lot of demand, but because they didn't have enough supply. The supply they did have, they didn't recoup price. You know what I say the biggest mistake they made was not keeping up with inflation. Now, I don't mean to pick on Vertiv. What I'm saying is that things are out of control when a business gets eviscerated for making the mistake of not jacking up its prices in order to maintain its margins. It was refreshing to hear an unmitigated apology from management. But what are they really apologizing for? Not getting all the semiconductors and other raw commodities they needed to make their product, and then not realizing they could get away with taking prices up huge because, well, hey, everyone else is doing it? Even the really great managers this year, the ones who have gigantic scale, are finding it difficult to navigate this gauntlet. So I think it's too much to ask. How can Vertiv pull it off? They're little guys, but they should have done better by their own admission. What needs to happen to break the cycle and kill inflation now? Should we ask the Federal Reserve to give us kin buttons? No. Just like the war, we're waiting for Ukraine, right? We're now waiting for the Fed to start killing inflation now. And since it's still buying bonds to keep rates down, forget killing inflation, it's not even trying to wound inflation. It's gotten so bad that if Jay Powell acts, like, say, tomorrow to start raising rates, I'm not kidding. I bet there'll be a lot of people who would actually start buying stocks in the news because they're just waiting for the other shoe to drop and have Jay get tough. Yes, for the market, it's a two-front war. The one in Ukraine, the one where businesses are now in trouble if they don't raise prices aggressively right in your face. Neither is intractable. Maybe Russia will decide it doesn't need Ukraine, just needs a pledge from Ukraine not to join NATO. I doubt it, but who knows? And maybe Jay Powell can change the psychology of the industrialists by slowing the economy down to the point where supply chains can catch up and workers return to the workplace as COVID runs its course. If you have enough supply to sell, then perhaps you can't raise price because the buyer won't accept it like they are now. We get a break in either one of these, inflation or Russian aggression, then you're going to get a snapback rally of epic proportions. The kind of rally we haven't seen since 2020, when the kids stopped playing Call of Duty and started day trading. But the bottom line, unless the West wins the war of words with Russia or Powell slays inflation, you have to expect more of these torturous days and fewer tortured young traders. As it lasts, they fall by the wayside in droves. Jeff in Texas. Jeff!
Hey, booyah, Jim. It's Jeff in Texas.
All right, booyah, Jeff.
Into Chipotle the end of last year. It's been a house of pain. What do I do with it, Jim?
Well, look, this is a great American company, and this is one of those stocks that we're going to look back and say, when did we last get a chance to buy this company? How did we get a chance to buy it so cheap down here at $1,400? Now, look, if it was let's divide it by 10. If it was a $142 stock, you'd be saying, you know what, I can take it. I can take the pain. But because it's still got that 1,000 handle, it's difficult. I think you buy some every 200 points down. I know that seems crazy, but that's the way you do it. How about Arthur in Illinois? Arthur.
Yes, how are you, Professor Cramer?
I am doing well. How about you, Arthur?
Very good, thank you. My question is about Ford and any information you might have that would affect the price of the stock.
Certainly.
I know that you sold.
Yep, we did sell some for the investment club. We sold it in the mid-20s. We're waiting to buy it back. We don't feel like we have the comfort yet. We do have good dividend protection, but frankly, we know that this economy is not that good. But we have not yet in the investment club bought back. We want to buy Ford. We do want to buy Ford. We think it's great. You have a big position for the charitable trust. Unless the West wins the war of words with Russia or Powell slays inflation, you got to expect more torturous days. Keep your hands in your, just sit on your hands until your right prices get to the prices you want, not the ones that the market's giving you on Mail Money Tonight. Goldman Sachs CEO David Solomon has a clear vision for the future of the bank. I'm getting the latest with the executive from the company's headquarters. And the market has been a house of pain, you and I know it. But is there possible we have a bottom? I'm going off the charts to find out. And Peloton has a new director and a new direction, new CEO. I'm hearing more about his plans in his first broadcast interview at the helm of the fitness company. You do not want to miss that. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.